Good morning, you're watching Market Cafe on ET Now with me Shreyanshi Singh and Kanishka Sarkar, and over the next 1 hour we'll get you updates from within the country as well as across the globe. Also tell you which stocks you should be keeping on your radar bright and early this morning. And while Kanishka, speaking of stocks, let's take a look at the handover coming in from the Wall Street.
Absolutely. Well, it was a very volatile session on Wall Street yesterday. The S&P 500 egged out a gain of less than 0.1%, allowing the index to keep its winning streak alive. Now, the Dow Jones added about 0.3%, while the Nasdaq Composite ticked 0.1% lower. Well, the three major indexes swung between gains and losses in the choppy session. The Dow tumbled more than 240 points at its low, in fact, and rallied around 300 points at the day's high. The S&P 500 and Nasdaq both traded more than 1% in the red at the session lows before taking a leg up in the afternoon trading. Now remember, these moves come as investors are awaiting more earnings reports. Now if you look at the monthly moves, the Dow and S&P 500 are on track to finish April in the red. With just two sessions left in the trading month, the Dow and S&P 500 have tumbled more than 4% and 1% respectively, whereas the Nasdaq Composite, on the other hand, is up 0.4%. Remember, investors are gearing up for a very busy earnings week with about one-third of S&P 500 listed firms slated to post results between Monday and Friday. Big tech is of particular focus, with Meta Platforms and Microsoft expected on Wednesday and Apple and Amazon scheduled for Thursday. Now, apart from that, traders will also monitor economic data on home prices, consumer confidence and job openings later in the day.
Well, absolutely. That's definitely something that we're keeping an eye on when it comes to the data, right? But when you take a look at crude oil prices as well, you do have a fall coming in to the tune of about $1 a barrel. And that is something that you saw on the back of demand fears that were arising from the trade war between the United States and China. That is something that you've seen that has been a very constant theme as far as oil prices are concerned. You did have oil prices, in fact, also falling into contango because of this particular factor. Ever since the tariffs kicked in, you do have some bearish trends, in fact, that have been observed on the charts as well for oil. But when you take a look at Brent crude futures, 1.5% downtick coming in. For Brent futures, $65 a barrel is the level that we managed to maintain for Brent, and US WTI as well. 97 cents is the kind of loss that you had coming in, 1.5% here again. And $62 a barrel is the level that was maintained for US WTI as well. You did, of course, have Brent futures rising marginally in the previous two sessions, so some strength that you saw coming in as far as the last two sessions were concerned. But nonetheless, you did have a week-on-week decrease of over 1% coming in because of those concerns of the impact of tariff on the global economy. Like I mentioned, it's been a very consistent factor coming in, consistent, in fact, drag coming in as far as oil prices are concerned. And you do have conflicting signals also coming in from US President Donald Trump as well as Beijing over what progress is to be made when it comes to de-escalating the trade war. Definitely something that we're looking at. Other than that, you do have OPEC Plus commentary coming in. May 5th is the date that you should be marking on your calendar when it comes to important commentary from the OPEC Plus. So definitely something else that we're looking out for, Kanishka.
Well, absolutely. Lots of global cues to watch out for today. For instance, goods trade, jobs opening data, conference board consumer confidence data is expected in the US, whereas in the Eurozone, consumer confidence data is going to be out. Now remember, Japan markets are closed for a public holiday today. In terms of global earnings, General Motors, HSBC and AstraZeneca are going to report their Q4 earnings. Back home, in terms of Q4 earnings, we have Bajaj Finance, Bajaj Finserv as well as Trent reporting their quarterly results today. Corporate action also to watch out today. Now, Bajaj Finance is going to mull a bonus issue as well as stock split, whereas the NTPC Green Board is considering a fundraising move.
Well, absolutely. There's lots to look out for when it comes to data, right? But moving on then onto the top headlines this morning, China, in fact, has gone ahead and denied once again that it is in talks to resolve the tariff war with the United States. In fact, a repeated clarification comes after a series of statements that we had coming in by Donald Trump and his aides also suggesting that negotiations were underway. In fact, the latest blanket denial was in line with Beijing's hardline stance against Trump's massive 145% tariffs on imports from China. On the flip side, however, you do have the Trump administration, including Treasury Secretary Scott Bessent, that have been insisting that the US is better positioned to win a trade war than China is.
Absolutely. Meanwhile, according to top officials, the US president is expected to move to reduce the impact of his automotive tariffs by alleviating some duties imposed on foreign parts and domestically manufactured cars and keeping tariffs on cars made abroad from piling on top of the other. Commerce Secretary Howard Lutnick, in a statement, has said that Trump is building a rapport with domestic automakers. In fact, he says the deal may make a major victory for the president's trade policy by rewarding companies who manufacture domestically while providing runway to manufacturers who have expressed their commitment to invest in America and expand their domestic manufacturing.
Rather than moving on to key updates on the geopolitical front, then Russia has declared a 72-hour unilateral ceasefire in Ukraine to coincide with its most sacrosanct national holiday, marking the World War II defeat of Nazi Germany. Victory Day, calling on Kyiv to agree to the pause. Putin's move, in fact, appeared aimed, in fact, at signaling that Russia is still interested in peace, something that Ukraine and its European allies dispute as US President Donald Trump's administration in Washington grows impatient with stuttering efforts toward peace. Kyiv, in fact, questioned why Putin would not agree to its call for an immediate ceasefire lasting at least 30 days to pave the way for diplomacy.
All right, then moving on, IBM has announced an investment worth $150 billion in the United States over the next 5 years, including more than $30 billion to advance American manufacturing of its mainframe and quantum computers. Now, the announcement comes weeks after Trump unveiled his reciprocal tariff policy to boost manufacturing in the U.S. As of late April, Trump has exempted chips as well as smartphones, computers, and other tech devices and components from the tariffs. Now, the company says its investment will help accelerate America's role as a global leader in computing and fueling the economy.
Rather than a whole host of meetings took place yesterday, Defence Minister Rajnath Singh gave Prime Minister Modi a full briefing on the situation at the line of control. In fact, sources also say that the discussion covered ceasefire violations, troop readiness, in fact, and the ongoing counter-terror ops led by the army. In fact, Rajnath had met with Army Chief and the Chief of Defence Staff just before heading into the meeting with the Prime Minister, talk about a war room powwow. Also, the Parliamentary Standing Committee on Defence wrapped up its own meeting.
Absolutely. Moving on, Pakistan has shut its airspace for Indian flights, forcing massive rerouting. Now, what will be the impact on international airlines? Are Indian airlines and flyers ready for higher fuel costs, longer crew hours, and delays? My colleague Anurag Shah takes us through the impact on international travel.
So after Pahalgam attack, Indian carriers are not using Pakistan airspace, which has impacted international air travel and airlines companies. So flights from Amritsar, Delhi, Jaipur, Lucknow, Varanasi are impacted most, and flights from these airports are got rerouted for the international destination. Flights to United States, Europe are taking 2 to 2.5 hours longer, which has also impacted in form of higher fuel cost for Indian carriers, crew working longer hours, and overall delays. Delhi's International Airport, IGI Airport, is the worst impacted by closing of Pakistan airspace. So new routes, so you can see in the graphs also that new routes to Middle East is through Arabian Sea. Prior, the flights to Middle East used to take Pakistan airspace, but now you can see that a new route is through the Arabian Sea, and flights to North America is taking Central Asia and the route through Russia. You can see in the graph. Flights to Europe also are taking a different route through Iran and Central Asia. So flights to North America with a layover in European airports. This is also we have gathered information. So how much longer Indian flights are taking? So for Middle East, time is 20 minutes to 30 minutes. West Asia, 40 minutes longer time. Central Asia time is more than 1 hour. For European international flights, for European countries, the time is longer by 2 hours, and for North America flights, they are longer time is up to 4 hours also. So overall airlines industry is impacted, and Indigo and Air India are the most impacted due to Indian carriers which are not using Pakistan airspace. So as per our sources, in coming days we will see that overall international airfare will go up by 8 to 12% because of that only airlines are forced to carry more fuel, reduce passenger, and impose baggage restrictions also. So these are the main impact of on airlines industry after the Pahalgam attack, in which Indian carriers had decided not to use Pakistan airspace.
All right, thanks Anurag for getting us all of those important details. So looks like bigger pocket pinches on the cards when it comes to flyers, because you do have both the countries flexing their soft power muscles. Meanwhile, Pakistan's defense minister says a military incursion by India is imminent. In fact, he also claims that Pakistan has reinforced troops along the border, and also warns that while conflict could happen, both sides must avoid the nuclear option. This just days after the horrific terror attack on tourists in Pahalgam. Also, a 63,000 crore rupees Rafale deal with France is also now inked, sealed and delivered 26 marine fighter jets ready to rule the skies and seas from INS Vikramaditya and INS Vikrant. A powerful signal, even though it'll take about 5 years for the jets to land on deck. So where does all this leave India? Are we staring at a bigger strategic realignment? And how real is the threat of war? We caught up with some experts on the same. Let's go across and listen in.
President Obama took out Bin Laden from Abbottabad, we will also do the same thing to these terrorist Akas in Pakistan, whether it be Dawood Abraham or Salaluddin or Hafiz Saeed or Masood Azhar or Lakhvi or even Saifullah Khan. And India has the capacity of being able to do that. But unfortunately for us, two things. One, China will tie a large quantum of Indian armed forces, 30 to 40% at all costs. In addition, they have started rushing in PL-15 air-to-air missiles to Pakistan. These are beyond visual range missiles, but has a capacity range of only about 140 to 150 kilometers. Our Rafales have got a range of about, Meteor missile has got a range of about 200 kilometers. And I don't think they will match up with Rafale under any circumstances. Rafale is far too superior to the Pakistani aircraft JL-17, which is they're going to be matched. But Chinese intentions are becoming more and more clear. I don't think we will do any military invasion of POK whatsoever. We are not going to threaten China's CPEC.
Yes, what Trump has said, we should not go into he wants to keep away. At the same time, probably because of the terror angle into the thing, he also would not like to be seen standing with Pakistan, because the proofs are there, the clear-cut linkages are there. So, and one more example was there of a closer relationship was return of Tahabur Rana to India. That was one angle. Second thing which you had mentioned is about the building of armed forces, the kind of statements which Pakistan is making. Pakistan, yes, has mobilized their forces. India is carrying out rehearsals. We are also shaping our plans. Our plans are always ready. But however, keeping in view the present situation, the dynamic situation, army plans are always modified, and a lot of coordination is required in spite of all the plans in place. Because of it is not one only infantry goes, all armed services and inter-service, whether army, air force, navy, and intelligence work together to carry out precision attacks. So as because we cannot come loser. There is no runners up in battle. We have to be winner. There is no option of losing or coming second.
I think the actions by India in the next few weeks or months are going to be two-pronged. One is, of course, the short-term immediate response to reestablish deterrence across the LOC. And the second is, of course, a long-term strategy to nullify the effects of the Pakistani state itself. And I think a combination of these strategies will, much of it has played in the past, but I think will define the future course of the India's strategy towards Pakistan, which largely, if you compare it to the past, the narrative about Pakistan in the Indian discourse has virtually been relegated to the periphery.
Moving on, let's get you some more details on the Rafale deal that India and France have signed. Now, the two countries have signed a 63,000 crore rupees deal for 26 Rafale marine fighters under an inter-government agreement, which also includes setting up a production facility for Rafale fuselage. Now, the delivery of these aircraft will begin in 2028, 3 years from the date of the contract, and be completed by 2030, with the crew undergoing training in India as well as in France. Now, this means that by 2030, India will be operating 62 Rafale fighters, including 36 procured for the Indian Air Force in 2016. Let's go across to Sumita to get us all the details.
Well, to bolster Indian Navy's capabilities, India and France have signed a 63,000 crore deal for the acquisition of 26 Rafale marine jets. Remember, these are state-of-the-art jets and only France has them. So India, definitely for India, it's a force multiplier for Indian Navy and its capabilities as well. It's a government-to-government deal, and the delivery of these aircraft is going to happen by 2031. But let's understand what else is part of the deal. Like I said, the procurement purchase agreement involves 22 single-seater jets, 4 twin-seater trainers. It also includes fleet maintenance, logistical support, personnel training, and the most important thing is that these jets have been built for India's specific requirements. So definitely a booster shot for Indian Navy's capabilities in this seas. More than that, it's also a booster shot for India and French ties. It's a step up for bilateral ties between France and India. Remember, the Cabinet Committee on Security gave a go-ahead for the signing of this deal earlier this month, sometime in April first week itself. So definitely, it's a big one coming in as far as India-French ties are concerned. The deal we're given to understand, was signed by officials from both sides, France and India. There was the French ambassador, Dassault Aviation representatives, and of course the Defense Secretary.
All right, thanks Sumita for that update coming in. So that deal is very important. Now the delivery is of course much later, many years later, but then it's the signal that it sends across that is what matters at this point in time. But it's time for a very quick breather on the show. When we come back, we'll get you a check going on the Asian markets, so don't go anywhere.
All right, then moving on, let's get you a quick Asian market check. Now, Asia-Pacific markets are mostly trading in the green this morning as investors wait to see the extent of the impact of Trump's tariffs on corporate earnings and economic data expected from Wall Street this week. Now, remember, this is despite a volatile session on Wall Street overnight. Market watchers are also closely monitoring developments surrounding trade deal negotiations between the US and other countries. Now, Australia's benchmark S&P ASX 200 is up more than 0.5%. Over in South Korea, the Kospi index was flat in early trade but is now up more than 1%. Hong Kong's Hang Seng index is up about 0.5%, whereas China's Shanghai index is also up more than 0.5%. Remember, meanwhile, Japanese markets are closed for a public holiday. Back home, the Nifty ended the day over 1% higher at 24,328 levels yesterday. Now, following a brief two-day phase of profit booking, the broader market also demonstrated a strong rebound. Now, if you look at the implied Nifty this morning, it points to a gap-up opening of above the 24,480 levels. That's an uptick of more than 150 points. Now, remember, those are the levels we're tracking this morning as far as the Asia markets are concerned.
See how that really pans out for us back home. But moving on, then India's industrial production growth improved to 3% in the month of March compared to the revised 2.7% in February, according to data released by the National Statistics Office. But the performance was weaker than the 5.5% growth that was recorded. In fact, in the corresponding month a year ago, manufacturing, which accounts for nearly 78% of the IIP, grew just 3% in March, much lower than the 5.9% expansion a year ago. You do have mining activity that also nearly stalled, but the electricity sector offered some support. So that is something that you have in terms of an update coming in. As far as India's industrial production for the month of March is concerned, tell you what, let's also get you the word coming in from Saugata Bhattacharya, who's an independent economist. Also analyze these numbers and put them into perspective. Let's go across and listen in.
My own sense is this does show a fair bit of weakness. Mining, we already knew from the core sector numbers that we had seen earlier that mining would be relatively soft. The numbers that I've seen from the detailed sector-wise numbers, it's coming in largely from the sectors, the segment that you mentioned, particularly electronics and other equipment. My own guess is this partially reflects at least front loading of production and exports before the US tariffs would kick in. So my guess is we need to wait and see what happens after that. Once from the April numbers onwards, how these segments will react. But my own sense is this does reflect a sense of weakness, particularly in the manufacturing segment.
All right, that's the expert view on India's industrial production numbers. Now, moving on. Apple's App Store in 2024 facilitated a cumulative 44,447 crore rupees in developer billings and sales. That's according to data accessed by ET Now. Now, this resulted in App Store earnings of developers increasing 74% between 2021 to 2024. The data also suggests that about 94% of this commerce have gone directly to developers and businesses. Food delivery, travel, gaming and entertainment are some of the key categories shaping the App Store ecosystem in India. Now, global earnings for India-based developers have tripled over the past 5 years. In fact, in a statement, Apple CEO Tim Cook said that App Store has been an economic miracle for developers in India and all around the world, and we're thrilled to support their work. Nearly 80% of earnings for India-based developers in 2024 came from international market apps from India. Were downloaded over 755 million times globally. Now, this is coming in at a time when Apple's looking at scaling up its India operation. Reports also suggest that Apple may shift the entire assembly of iPhone manufacturing meant for US to India by next year.
All right, then moving on, let's get you some more news and updates. Then a big bang IPO turns into a big pause. This is an ET Now exclusive. LG Electronics is hitting the brakes on its mega 2025 listing, spooked by April's market mayhem, coupled with tariff tremors as well as Indo-Pak tensions. Anurag Joshi is getting you all the inside track. Anurag, over to you.
LG Electronics India, a unit of the South Korean conglomerate giant, is said to have postponed its initial public offering plans. Sources have told ET Now that the decision was driven due to a surge in volatility in domestic equities in April. The company may not consider resuming work on the IPO before April, and LG Electronics' IPO plan is among the biggest upcoming IPOs from India in 2025. The company had completed an investor roadshow for the IPO and met potential investors. LG Electronics owns 100% equity stake in the company, and LG is among South Korea's top conglomerates and which are known as chaebols. The LG had initially expected an overall valuation of about $15 billion from the IPO for the Indian unit. LG Electronics is selling 15% equity stake through an offer for sale through the IPO, and that is about 102 million equity shares in the company. Just last month, SEBI had approved the draft equity document of the company for the proposed IPO.
All right, then let's shift focus to the auto space. Rajesh Jejurikar, the Executive Director and CEO at Auto and Farm sector of the Mahindra & Mahindra, discussed with us the potential synergies from acquiring majority stake in SML, and he also says that SML will remain a listed entity. Listen in to his views.
SML has an electric bus ready. We had not done any work on electric buses. Electric buses will be a very fast growing segment as well. So I don't think this is an indication of the fact that other parts of our business won't grow. It's just that what's the new avenue for growth, not just for the auto business, but even as a group. And a 5,000 crore business which can go in the next 3 to 5 years to 10,000 crore plus is not something which is insignificant. Right now, at least, SML Isuzu as a separate listed entity will stay a listed entity. The trucks and buses business of M&M stays within M&M. We will look at how we fully synergize operations and resources, talent, platforms to get the growth and scale. So we will have to, in our mindset, even though they are in two separate legal entities, think about it as one.
Alright, and with that, it's time for a very quick breather on the show. More news and updates on the other side, so stay tuned.
Welcome back to ET Now. You're watching Market Cafe with me, Kanishka Sarkar and Shreyansi Singh. Well, a gap-up opening is what we are penciling in at this moment. But before that, my colleague Ansh is joining in with a quick F&O snapshot.
Well, in the previous session, Nifty was up around 300 points, snapping two-session losing streak. But most importantly, it took very strong support at that 200 EMA, which is around 24,050 mark. And it has been consolidating just above the 200 EMA from last 5 consecutive sessions, indicating very strong support at this 200 EMA. So there's a bull sign in the market. Also, if you talk about index options, then we are seeing very active put writing happening at the 24,200 strike, indicating option traders are expecting good support base around this level. If we talk about Nifty Bank, then here also we saw good bullish pressure. Nifty Bank has snapped its 3-session losing streak, whereas in index future, if you'll see, then there open interest has gone up by around 2%, indicating significant long build-up happening in banking space as well. If we talk about index futures, then we are seeing in the previous session, FI especially, they added around 9,200 contract. At the same time, they covered their short as well by around more than 3,000 contract, due to which the total long position has inched higher from 37.6% directly to 42.3%. On flip side, retail also added some bullish pressure, but at the same time, they have covered their shorts as well by around 14,000 contract, due to which the total long position has gone down from 46.3% to 44.8%. So FI seems to be getting bullish, but retail, they seems to be getting a bit cautious in this market.
Well, absolutely, definitely the trends that we're keeping an eye on, right, Ansh? But moving on, let's keep an eye on the stocks that you should be keeping on your radar. In fact, Gaurav is standing by with just that list.
Well, yes. First, let's talk about PNB Housing, because good set of number is what we saw. Net interest income increased almost by 20%, while profitability increased almost by 25% on a year-on-year basis. UCO Bank is also in focus today, because here also we saw profitability increasing almost by 24%. And on the other hand, we also saw actually asset quality improving for the bank, with net NPS going down as low as 0.5%. On the other hand, we also have First Source, who reported inline set of numbers, because when we look at the profitability, that actually remained flat on a sequential basis, but margins actually expanded almost to 11.5%. We also have Oberoi Realty, who actually reported weak set of numbers, because revenue declined almost by 12%, while profitability declined almost by 45% on a year-on-year basis. And we also have IIFL Capital Services, who also reported weak set of numbers, because here also we saw profitability going down almost by 29%. Other than that, IndusInd Bank is going to be in focus, because Mr. Arun Khurana, who is a whole-time director, has actually tendered his resignation, and it will be effective from 28th April, which is yesterday. Aurobindo Pharma is also in focus today, because there was a fire incident which happened at one of its manufacturing facility in Andhra Pradesh, and as a result, company will be keeping this manufacturing facility shut for 20 to 25 days. Paytm is also in focus today, because one of their subsidiaries has now got a GST letter which demands 5,712 crores worth of GST, and that is the reason why this company is in focus. And lastly, let's also focus on Coforge, because Coforge UK, which is a wholly owned subsidiary of Coforge, is now going to sell one of its unit to Sapien UK for around 43 million pounds, and that is the reason why this company is also going to be in focus. So definitely watching out on all these stocks on the back of the news flow that we have received today.
Thank you, Gaurav, for getting us that list. Definitely a lot of stocks to watch out for in trade today. But now let's shift focus to the earnings space. TVS Motor has beat street estimates in the fourth quarter with a robust performance across all parameters. Now, PLI benefits also reflect in its margin, with the management remaining optimistic about further growth. Srishti joins in with all the con call highlights and the brokerage verdict.
Well, yes, great set of numbers coming in from TVS Motors. It's a beat on all the parameters, and especially look at the reported margin that stands at 14%. But a caveat here that the company does say that this is including the PLI benefits, and if we exclude that, the EBITDA margin stands at 12.5%. That too is actually better than the street estimates. In terms of the outlook, that stands very positive, and especially on the international market, where they're saying that from now they believe that the international should pick up and FY26 exports should be better than FY26. given a low base impact. Other than that, when it comes to the domestic market, they are hopeful that this year the domestic market growth should be similar to the previous year. The company is ready with some of the upcoming launches that they will plan in a gradual manner. But other than that, in terms of the domestic sales, they do highlight that the May and the June months looks very strong, and the marriage season sale has already started for TVS Motors. In the industry-wide expectation, they do expect that the scooter share will continue growing from here on as well, and they are also ready with the CNG variant. They will come out with the launch at the appropriate time. So that was the commentary coming in the con call highlights, very strong rather onto the demand aspects given such an environment, especially in the international market, and even brokerages are liking the results. Case in point being Nuvama, where they continue to maintain their buy rating and have raised the target price from 31 earlier to 3,200 rupees now, and along with that, rest of the brokerages are liking the results too. Back to you.
Well, absolutely. Thanks, Srishti, for getting us a roundup. As far as TVS Motor is concerned, that's the stock to watch out for. But we should also be watching out for Bajaj Finance, because that's the one that is all set to come out with its Q4 earnings, where both profit as well as PPOP are likely to jump on a year-on-year basis. On the other hand, you do have margin that is expected to contract on a sequential basis. In fact, Varun is standing by to tell us what the street is penciling in.
So if you look at the quarterly update that Bajaj Finance has given, that was good because the customer acquisition that the company has done was good. The AUM growth, that was also good, and the loan growth was also good for this company. If you look at the new loans book, that was up by around 36% on a year-on-year basis, and the AUM that has grown by around 26%. If you look at the deposit growth, that has also shown a good growth of around 19%. Because of this, because of the support by the healthy customer acquisition and also rollout of new products, we are expecting the overall growth of this company to be good, and that's the reason we are expecting the NI to go up by 23% and the PPOP to go up by 27% and the profit to go up by around 19.5%. Now the margins, if you look, they are expected to contract a little bit in this quarter because some of the operating levels that the company used to get, that would flow in the coming quarter. We have seen rate cuts that would impact the company in the coming quarter itself. Yes, but the interest expenses, if you look, they are expected to peak out this quarter, and hence this quarter might be the last quarter where you are seeing some decrease in the overall net interest margins for the company. From next quarter, we are expecting the net interest margin for the company to actually increase. The credit cost, they are expected to decline by around 5 basis points this quarter, and also the overall collections and recoveries, they are expected to stabilize a bit, and that will help the overall profit and loss and also balance sheet of the company. Other than that, keep an eye on overall guidance of the company, and also other than result, the company is also going to announce bonus or stock split. So that's also an important event that you need to keep and watch on.
Thank you, Varun, for getting us that snapshot of what to expect as far as Bajaj Finance earnings are concerned. Now, moving on, let's take a look at market expert views. Now, even as Bernstein's Venugopal Gare cites 26,500 as an achievable target for the Nifty this year, he expects volatility to continue plaguing the street. Now, how should you position yourself in this kind of a market? What are the themes to watch out for and the stocks to keep on your radar? Listen in to his expert views.
We felt that domestic stories should have a higher weight, which essentially meant that I ended up having my highest overweights in the financial sector. I have overweight on telecom, and I ended up upgrading utilities to an overweight. So these were the three defining overweights for us. We had moved to an underweight in healthcare. Remember, that was a globally exposed sector. Now, after 3 months of underperformance, we are equal weightage healthcare. We had a marginal overweight on IT services beginning of the year. We actually cut down the weights quite a bit through the year, and we are now more equal weightish, but not underweight IT. We are still playing it with particular stocks. And this is the contours of sectors, right? But from a stock standpoint, if you look at the India portfolio, hasn't really tweaked much in the last 4 months, but has recovery candidates, which we had sort of included in that portfolio. Something like Bharti was added to the portfolio and Adani Ports was added to the portfolio. So we had some consumption names like Avenue Supermarts, and we booked profits in Zomato, but got into Jubilant. So it was a very wide range of bottom-up selection, honestly.
So that's the strategy. Go for a bottom-up approach. Hi, Venu, this is Shrishti also joining in. Let me touch a bit upon the IT space. Since AI is the biggest talking point right now, and we know that the US and China are definitely reading the race, but what's in the context with the Indian AI companies now that they have started talking about this transition? Do you believe that it could be a boon or a bane for the Indian IT space?
You know, I'm a bear, so on this story, so which essentially means that I'm worried. I wrote a report called AI Unleashed Game Over for Indian Jobs. I mean, I normally don't like taking such extreme long-term views, which are negative in nature. It's great to take extreme long-term positive views because no one knows. But the reality is that AI is very, very clearly disruptive. And the unfortunate reality of India is yet again, we are consumers of international technology. And we have seen this over and over in almost every particular industry. We do not originate technologies. We do not originate innovation. We are primarily an unorganized to organized ecosystem in terms of corporates, or primarily labor arbitrage industries, be the IT or manufacturing. This is the unfortunate reality of India. So what it does is that as AI becomes more and more intelligent in terms of the features and offerings, there is going to be essentially issues with the industries which are exposed to that, which is the knowledge industries. At the lowest end of the industry, you will see the most disruption, and slowly it will start to hit at the mid end of that IT services industry over time. Nothing is going to be impactful in the next couple of years, because our theory is that the next couple of years we'll see volume of opportunity increase for IT services as more and more companies find it easier to implement IT solutions at lower cost. So volumes will increase first, and thereafter, once that swath of volumes go off, you'll essentially see potential risks coming in. The second part of this theory is essentially that it does lead to wage deflation as well from an Indian high-end services ecosystem. Wage deflation essentially means the approach to per capita incomes might have to change over time. So which essentially means the kind of products and kind of companies we look at perhaps might have to change. So there's a host of topics essentially, but we should worry. If we don't worry, then the story is over.
Right. I want to link it also to, what's happening on foreign flows, Venu. We did touch upon currency, and I guess that's going to be a big dominant factor. While month to date, we've seen a good amount of FI money coming back, but I don't know if it's really permanent in nature, or is it more sort of tactical, you think?
The interesting thing is even FIIs don't know whether it's going to be permanent. So I'll tell you a very quick story around this. The story is this, that most FIIs, when I say FIIs, I normally focus on emerging market funds globally, which are the main sort of funds which tend to invest in India. Global funds are typically have very small allocations. So these emerging market funds were either overweight on India or neutral on India, or were looking to add to the Indian market at the peak of the Indian market in July, August last year, when I was actually telling them to sell. The unfortunate reality is all of them, not all of them, most of them as a cohort were underweight India or equal weight India, or looking to sell in February of this year at the bottom of the market. Now, what does it tell me? It tells me that there wasn't much of FII selling left, because if you're already underweight, the only risk would have been if there was a flow out of EM funds into any other cohort of asset classes, be it DM funds. But what I was hearing there is that money from DM itself has to move somewhere, because there was an over concentration of sort of exposure to US that the DM funds have. So either money within DM moves to different DMs, or essentially part of it comes to EM. So which gives me some comfort that FII selling had bottomed out. This is a report we wrote on March 18th. Now, going forward, the reality is that I think FII flows will be very volatile. Unless India gets identified as the biggest beneficiary of what is happening in the next 6 to 12 months in terms of supply chain shifts, I don't think there's going to be a very, very large FII inflow coming into India. It will remain volatile, but I don't really see exits. So worst case for me is over the next 6 to 7 months, no outflow with volatility. That's a worst case for me.
While you've given us the positive case scenario for the Nifty 26,500, but I was just going through one of your reports and it talks about a non-linear recovery, and I want to probe you a little bit more about that, because while you are saying that there is going to be volatility in the second half of 2025, elaborate on the key events do you think or indicators that you're monitoring wherein you think there is a scope for this linear recovery to be either a sharp recovery, or do you think it's going to be a volatile, wobbly ride to 26,500?
It's very tough to take a linear view out here because there's so many global events which we discussed which are uncertain, including currency, including tariffs. Remember, we've got a 90-day or probably another 70 days left. There'll be trade negotiations with the US. We don't know how that's going to shape up. And just more recently, Trump appears to be wanting to bring down the tariff again on China. So there's so many factors globally. Now, locally, if you were to look at also their volatility factors, the macro is improving, but it's not like a massive recovery. If you see things like power demand, for example, every month there's a different data. So monsoons hopefully should be good, but what if they're not good, right? So, but yet I would be okay with macro this year versus last year. I'm just giving you a range of static thoughts, but the idea of this is essentially that unless there is a coherent reason to believe that...
All right, then that's some key commentary coming in as far as FII flows are concerned. But moving on then, let's get you news from outside the world of stocks. Early results from Canada's 2025 election show a tight race with Liberals winning 11 seats and Conservatives close behind with 5 out of 32 declared so far. Meanwhile, polls have officially closed at all 4 Atlantic Canada provinces. Moving on, then, a massive blackout hit Spain and Portugal on Monday, leaving millions without power. While power started returning late on Monday, Spain declared a national emergency and deployed 30,000 police officers to maintain law and order. The cause of the power outage remains unclear at this point, with both countries blaming cross-border grid issues.
Next up, Amazon has launched its first batch of Project Kuiper internet satellites, marking the start of its push to rival Elon Musk's Starlink. The Kuiper Atlas 1 mission lifted off from Florida, carrying 27 satellites into space. Rajasthan Royals 14-year-old sensation Vaibhav Suryavanshi smashed a blistering 101 off 37 balls, breaking multiple records and chasing down 210 runs in under 16 overs against Gujarat Titans, creating IPL history. Meanwhile, Delhi Capitals will face Kolkata Knight Riders today in a crucial IPL clash.
Alright, and with that, completely out of time on this edition of Market Cafe on ET Now. Thank you so much for tuning in. Don't go anywhere because the market takes all of the action forward.